Hi everyone, and welcome back to Stephan Livera podcast, brought to you by Bold. For American listeners, you can go to getbold.io to buy Bitcoin there. Now, rejoining me on the show is my friend Nicolas Burtey. He is the founder or co-founder and CEO of Galoy. So welcome back to the show, Nicolas.
Yeah, thanks for having me back, Stephan.
So lots of things have happened, as I, some listeners may know, some may not, but Blink and Galoy have, gone separate ways. I guess sister companies now, and you are, still leading the Galoy side of it. And of course, you have been, spending a lot of time in El Salvador over the years, and have also, I think, some interesting insights to share around what does Bitcoin banking look like, and of course, what does it look like really on the ground, trying to do Bitcoin on the ground. So let's just start there. I guess maybe just a quick overview for listeners who don't know you. Do you want to just kind of go back to the beginning of what you were doing with what was then called, Bitcoin Beach Wallet, and now it's called Blink?
Yeah, sure. So if I come back to the beginning of time, for my journey in Bitcoin, so I founded Galoy in 2019, and I wanted to show that you could use Bitcoin to pay for coffee. I know it was a meme at the time. It's no longer a meme. You can do it now. But I was looking for places to develop tooling using Lightning. At the time, it was really my idea. I understood that maybe in the United States it was not going to happen, pay for small goods and services in Lightning because of mostly capital gain issue. And so I heard about a project in El Salvador before the Bitcoin law.
Before the Bitcoin law, just
effect.
for listeners,
yeah,
right? I think the Bitcoin law was, September or so, 2021. So what you're talking about is actually before that.
Yeah, like 18 months before. And so I heard about this community called Bitcoin Beach, and I say, hey, you know what? I can help you develop the wallet, because I wanted also to build something in the Bitcoin space, and you need users, right, to get started. And I really wanted to be in the, helping on board, I guess, new user into Bitcoin. And El Salvador seems a very promising land to build a wallet. So I went there and I created the Bitcoin Beach wallet. It was more than 4 years ago now. And shortly thereafter, the Bitcoin law came, and the wallet grew quite significantly after the Bitcoin law. But my goal at Galoy is really to make banking software, get bank and financial institution to adopt Bitcoin. And it's really more like a B2B software idea, like, you will get banks to adopt Bitcoin. Of course, like 5 years ago, it was still early to get bank to adopt Bitcoin, and we can dive into why. Like, there is some regulatory hurdles that are changing now. But the idea is that, okay, if you will create your own customer, so you will just create a wallet, and this is customer zero, and the wallet go quite significantly after the Bitcoin law. But if you make a wallet, it's like really a B2C idea, like you will have to make some gamification. So if you try Bitcoin Beach Wallet, now Blink, like you will have a system to earn sats by answering quiz, and there is a map, and you have to think a lot about, how do I get, my application viral to get more, more user. And
I
it's
guess
really
I'm curious as well,
thinking.
just to hear your thought as well, because I think the community at that time had a very different idea about Lightning, right? I think it's probably fair to say that, there was kind of if you looked at kind of the Bitcoin Lightning community, it was sort of like, oh yeah, you run your node back home, and that's like your Lightning channels, and, and it was kind of very end user focused. But at the same time, there were products like Bitcoin Beach Wallet at the time, which was like a custodial, easy to run sort of app that people could use without having to be super technical. And I think that's probably an important context. And then I think what I would say, the way I would frame it is, and some people say this is a criticism, but it's almost like Lightning nowadays it's kind of like a B2B layer almost, but a lot of the end users are not necessarily doing the channels themselves and all this stuff. They're using a provider who deals with that for them. Now, we can talk about self-custody and all that. Of course, we want as many people to self-custody as possible, but I think that's probably an important thing to sort of just understand the context of how Lightning shifted and evolved, right? I'm curious how you see that.
I think that's very fair that 4 or 5 years ago, there was a lot of, small node, the Spleb and Raspberry Pi that were, participating in the Lightning Network. And I think we see less of it now. But for me, the fact that Lightning is getting more centralized into like bigger actor was always how it's going to play out. So,
right.
Even though the community maybe 4 years ago was a bit different, it's going where I would have expected to be. And the main reason is probably in 2019 when I founded Galoy, I started with a self-custody Lightning wallet. And I understand after working on it for a couple of months that it won't work for like most individual user because it's too complex and there is inherent limitation about how liquidity works for Lightning channels. It doesn't mean that Lightning is not valuable. I think Lightning is extremely valuable. And Lightning really map what we have in the banking system, in the fiat system where, if you have if you have an account at a bank, you need to fund it upfront. And if you want multiple bank, because you want to be able to send payment across different countries, this type of thing, you need to fund this different account, right? And Lightning is no different. And so you need liquidity basically. And a larger entity can manage liquidity, have the resources to do it. Like an individual, maybe doesn't have necessarily the financial resources to have the liquidity available, right, at all time. And this, I think I understood it, many years ago. And this is why I went to create like a custodial wallet, because I thought it would be useful. Of course, there is a lot of pushback against custodial wallet.
Of course, and of course, it's very important. We talk about in Bitcoin, not your keys, not your coins, all that. But at the same time, while we do say that, at the same time, I also acknowledge that not all 8 billion are going to be able to self-custody, at least with current technology. And for that reason, I think there will be Bitcoin banks. And I think maybe that's, for some people, that's controversial. For others, that's sort of like, it was always going to go that way, right? Yeah. So I think that's probably an important thing to talk about. So maybe this concept of Bitcoin banking, as you see it, can you explain a bit about, what is the correct role of Bitcoin banking?
Yeah, I can spend a lot of time on this question. I mean, one of the first things, just on the aspect on a Bitcoin bank, banking can be very different in Bitcoin than it is for fiat. Last week, we met in person in El Salvador for a Plan B forum, and my talk was about proof of reserve, because I think that's one element that can really differentiate Bitcoin banking to fiat banking. With Bitcoin banking, you can be full reserve, and it doesn't mean that you are going to print more money out of thin air, right? And I think there is generally the conception in maybe, the hardcore Bitcoin maximalist, quote unquote hardcore, that they say, no, you should not, you should always hold your own key, because otherwise we are going to oppose the fiat system. But the idea is that, for me, it's not necessarily the case. Bitcoin and central bank more than Bitcoin and banks. Banks can be useful, I think. And so if we dive into more what is Bitcoin banking and how it is different than fiat banking. So if we come back to the idea of Bitcoin Beach Wallet, for instance, something that is very unique for Bitcoin banking is that anyone can launch their own bank. And when I went to El Salvador 4 years ago, I didn't ask for permission. I just, went there, and there was user willing to use this wallet, and I started here, just, doing some software, and that's about it. And I think a key point is that you can't do that with fiat banking. Fiat banking is really the idea of you have to ask for permission before you can do anything. because you need access to a central bank or access to a bank. And like it's a permission system fundamentally. And I see a world where it's possible to have 1 million bank in Bitcoin just because, someone could launch a small bank in a city and serve their customers that are in their area in a way that's not possible, I think, with fiat banking. And if we just stay very generally on the concept of Bitcoin banking, I think there will be many forms of Bitcoin banking. The form that we are building with Galoy is maybe very similar to the fiat banking in the sense that we have a ledger and we can track transaction and we can see who own what. But there will be probably Bitcoin banking, I think, with eCash. The idea of like cashew or Fedimint, where it's also Bitcoin banking. It's custodial, but now you add a layer of privacy into it. And the challenge here for this project to see the light is more like the regulatory framework, and maybe in multiple jurisdictions it will be not welcome because it's too private. But this type of ID could never see the light in the world of fiat banking because you could not even get started, right? You could not even put something in production and see how it goes at small scale, like because it will be killed before you have one user. And now I see all the cashew mints in the world, and those are Bitcoin bank, and I want to see a world where there is 1 million of Bitcoin bank and Lightning is a collecting glue among all these banks, and I think that's awesome. You could also have Arc as another system that is not necessarily purely ledger based, and it's more self-sovereign, maybe like you have a way to exit. But
I guess the key point is that each of these things have like some kind of different trade-off, right? Like if you are using Liquid, okay, now you're putting some level of trust in the federation to not run away with your Bitcoin. Of course, there are swap servers and things like that. If you're using Arc, well, okay, then maybe there's more interactivity, and there's the ASP still have to kind of build that out, and it's still early days, but maybe there's some potential there. Then if you're on Cashew, that single mint can rug you, and that they can just run, just like we've seen in, let's say, there's always like darknet market rugs every now and again. So for all we know, they could just rug. On the Fedimint side, okay, it's a bit more technically complex, so maybe it's a more challenging thing to run. But at the same time, maybe there's there's positives and negatives to all of these things. And then let's say in the style of Bitcoin banking that's more professionally run by a known custodian, right? Like a Blink or others. And then I guess kind of even the less formal version might be the kind of Uncle Jim, right? Like the Uncle Jim who custodies coins for the people in the family because grandma hypothetically doesn't know how to do, etc., right? But I guess these are kind of some of the options that exist if you are not able to do everything yourself. I guess that's kind of the high level way I'm seeing it. How would you characterize some of those different options? And I guess there's also maybe an interesting distinction is, are they a local bank or community bank, or are they let's say a global style, just online, it's an app service bank?
On your question about local versus global, I think at least on the business success side of things, what I would qualify as Bitcoin bank that are successful are the ones that offer typically a buy Bitcoin functionality. And if you want to offer buy Bitcoin, it's very country dependent because you need access to a bank account. Banking is today, like at least fiat banking is local, right? You cannot today just say, okay, I will have a bank account in the US and be able to serve customer in, I don't know, Nigeria or Ghana or, South Africa, for instance. You will need typically a banking partner there if you want to serve those customers. And so I think the successful company in the space are typically buy Bitcoin local. Now, if you think about wallet like Blink or wallet of Satoshi, it's a bit a different approach because now it's like, okay, if you don't have fiat banking access, then now you can be more global. And now it's like you're not offering necessarily a buy Bitcoin functionality. You're more offering, like
Just kind of
a
the
wallet
payments functionality, right? Whereas maybe
payment
some of those
functionality,
other ones might offer the exchange feature, as an example, the brokerage or exchange feature.
Yeah. And so it remains to be seen, like, which in the long run, which business are going to be successful. Is it like the brokerage type of thing, or it's like very local, or is it like maybe company building on top of Lightning that can have a more global coverage? The challenge with the global company today is like the regulatory environment is getting more difficult. For instance, in the US, you can't get a US customer unless you have like money transmitter license, and you need to go on each state and get a license, and it's very costly. It seems Europe is moving in a similar direction. So it also depends on how the regulatory environment will evolve. Like if you need a license in every country to operate like a Bitcoin wallet, like I think the global the idea of having a global wallet will be maybe harder than getting more localized. But I think the companies that currently are focused on a single country, if it's a large country and you have a lot of volume and you offer buy Bitcoin, I think it's probably the first use case for Bitcoin banks that are very relevant. We see that the upcoming UK use case that we can discuss about is what we are currently working on is the idea of, okay, now that you have bought Bitcoin, the price of Bitcoin is going up. You could sell the Bitcoin, but most Bitcoiners don't want to sell. And now you can say, okay, maybe I'm going to borrow against your Bitcoin. So we see that as a significant use case upcoming.
Gotcha.
We are currently, one of our products is with Lana is focused on that.
Back to the show in a moment. This show brought to you by CoinKite.com, the creators of the best Bitcoin hardware security devices such as the Cold Card Mark IV and the new Cold Card Q. Now, we use Bitcoin hardware security devices to keep our keys offline, our private keys offline. Now, the way these work is you can do that setup, write down your 12 or 24 words on the seed word cards, and keep that secure. Now, you can use this device to interact with the Bitcoin network using software such as Sparrow Wallet, Electrum, or Vector Desktop, or Nunchuck as a few examples. Now, you have a range of security features that you can use with these devices, such as passphrases, you can use seed XOR, or my favorite is multi-signature. Now, if you're starting in a basic way, just start with the device and the USB-C cable, plug it directly to the computer and use it that way, and then later improve your setup. But I believe these devices are great at helping secure your coins, especially as you start to migrate up into multi-signature security. But don't be disheartened or don't be scared away. They are accessible, and I think you actually do learn about Bitcoin in the process. So to get yours, go to coinkite.com, use code Livera to get a discount on your cold card. And now, back to the show. Yeah, and so I guess there's different ways to achieve that. There are existing, let's say, companies who offer that kind of thing in the, let's say, in the Bitcoin world today, but this would also be about how can because to some extent we're going to see some of those Bitcoin companies sort of merge and become sort of fiat connected, and then we're going to see some of the fiat existing banks sort of merge to the Bitcoin world and say, well, okay, we're going to start offering Bitcoin custody. And then obviously, like you said, once a fiat bank offers Bitcoin custody, a very obvious next step for them is, hey, lending, because there's a lot of money to be made. It's a business model. It's a very clear business model. The over-collateralized loan or asset-backed lending is a very... it's a model that a lot of people understand. It's a model that's very popular for high net worth people and for some of these large banks to offer. And obviously they can make some interest revenue on that. So I think it's an interesting sort of, we're going to see the worlds merge. And I guess, so then the question also is, if you are a fiat bank, I guess, and you're thinking, okay, look, this Bitcoin thing is going off. Lots of people are getting into it. How do I get involved? I guess the natural options are either try to buy an existing Bitcoin lender, build something in-house, or take a white label solution. And that's how I understand it, right?
Yeah, if you want, I think offering buy Bitcoin functionality is what probably most bank will start with. Indeed, you can, connect to a brokerage for it, or typically you will connect to, a brokerage or have a OTC trade for it. And then you need to custody it. So, if you're not doing custody, you need people to get some on-chain address. But I think most bank will want to offer custody because it's their business to custody assets. It used to be that it was really their main business. Like when you think about Vault, gold was in Vault, and now more and more with fiat banking, the custody aspect is less relevant. But I think with Bitcoin, there will be more bank going back into like the real business of custody, where security is key. Like you are really investing into that. And that's certainly the first step that banks are going into, and then lending will follow. Something I think worth mentioning is that there is the conception that banks don't like Bitcoin. That is, banks are against Bitcoin because it's like eating their business. And I think that's, maybe the case for some banks, but the way I think about it is that a central bank have over time make bank very fragile because of like zero interest rate for a long period of time. It's bank have to go into like a high leverage, but if you think about the business of bank, historically it's like custody, and I think the idea of bank custodying like digital assets makes sense.
Yeah.
It's just that.
So I guess I'm curious. Are you then saying that the perception is that banks don't like Bitcoin, but actually some of them do, or they're not necessarily opposed to Bitcoin?
I think many do. The problem comes down to how banks are operated today. Banks need permission today, like in many countries, to do anything. Otherwise they lose their banking license. And unlike Bitcoin, with Bitcoin you don't need to ask anyone permission to access the central bank. You can just have a Bitcoin node and you can transact. With fiat banking, like if you lose your license, you lose your business. And the way the system works today with banks is that they need to ask permission for anything. And now there is more and more documents on Checkpoint 2.0 that are being released, but what you see that there are like dozen, if not hundred of banks that have been interesting to go into Bitcoin.
Yeah, this is such an important point, right? Because in the past bull run, in that past era, the 2021 era, there were big banks who wanted to do Bitcoin custody, and actually they were being guided or coached away from that by government and the regulators, which is kind of a huge bombshell that's kind of coming out. And now I think more and more people are starting to sort of accept, okay, Operation Chokepoint 2.0, it was a real thing where these banks were being either debanked, or individuals in the Bitcoin and crypto world were being debanked.
Yeah, exactly. And now a lot of documents are being released this week, I think, it started in the previous weeks, but now there is more and more accessible document. And clearly you see, an entity in the US is the FDIC, it's like their insure deposit. And because they insure deposit, like, they really have a lot of say into what a banks, might be doing. And you see document where they say to banks, like, your Bitcoin things here, like, until we say so, you should refrain from offering, product in this area indefinitely, basically. And of course, the bank, will invest 1 year, 2 years into it, and they see they cannot have a product, here, eventually they're just not going to invest. But, what we see, like, a lot of banks wanted to offer, Bitcoin product, and they've not been able to. And because the relationship between the bank and the regulator is private, like, we only start to see those communication now. I mean, we probably in the Bitcoin community, we had the insight that the regulator didn't want a bank to adopt Bitcoin. Now we have the proof of it, right? With like all the document for operation checkpoint 2.0. So the point is that I think bank wants to adopt Bitcoin. It's a great business for them. And they will, and I know that the regulatory landscape is changing like almost 180. I think a lot of banks in the United States will adopt Bitcoin. And one interesting thing, if we think about El Salvador, for instance, you may think, okay, El Salvador have adopting Bitcoin as legal tender in 2021. Why bank in El Salvador have not, is there not like any Bitcoin product in El Salvador for the bank specifically? And the reason is because if you think about it, a bank in El Salvador is using the US dollar, and the way they move money, I mean, if you move from El Salvador account to an El Salvador account, you just use the central bank clearing system. But where do a bank in El Salvador keep their deposit of US dollar? They keep it in a bank in the US, right? And it's like a layer 2 type of thing, right? You can, if we think about Bitcoin term, like layer 1 is the Fed maybe, and layer 2 are the banks in the United States. And El Salvador is kind of a layer 3 using banks,
right. Because
in the
they
United
don't have
States.
direct access to the Federal Reserve in a way. They don't get a Federal Reserve master account, I guess is the technical term. And
whether they have or whether they don't, the point is that even though Bitcoin is, or was, I should say, legal tender in El Salvador, this law didn't matter much because their corresponding bank, and they need corresponding bank, the bank here in the US, were saying no, like the rules here say you can't touch Bitcoin. So if you touch Bitcoin, we're not going to work with you anymore, right? And so the bank in El Salvador, so
it's like a chilling effect in the US that spills over to other countries, even if
and that
they
spill
would
over
like
to everywhere,
to,
right? Any bank that needs like some US dollar, which is like virtually 100% of the bank, right? To some extent, like need access to the dollar because it's an international reserve currency. If they lose their access to the dollar, then they're not going to integrate Bitcoin. So you can even think, okay, like maybe Operation Checkpoint 2.0 is like a US thing. It's like have implication in, virtually all countries in the world. So now that this, we see over the last couple of weeks, like, no, it's like, even the, John Paul say, no, bank can work, in Bitcoin, crypto. Like, I think he would have never said that a year ago. So I see definitively the fiat bank going into Bitcoin like quickly, because now the market is opening up.
Yeah.
But I see also a lot of
US government regulatory topic. We should also chat. Obviously, the big one that recently was repealed is this SAB 121. Do you want to comment on your thoughts there? Does that enable a lot more banks to actually start doing Bitcoin products and services and custody?
Yeah, so there was a different hurdle. We talk about Checkpoint 2.0, which is like an overall term. There was a FDIC, which is the insurance of the bank that were preventing bank to adopt Bitcoin. In addition to that, there were indeed a SEC bulletin called SAB 121 that said that if a bank want to custody, like if a bank were over all the other hurdles, this was an additional one that said a bank that have, let's say, 10 Bitcoin on behalf of their customer should have an equivalent amount of dollar locked in reserve to support this 10 Bitcoin. So it's like an insurance, if you want to think about it, where like we don't trust this, Bitcoin collateral. So you have 10 Bitcoin worth like $1 million, like on behalf of your customer. Sure, reserve like $1 million for it just in case, and you cannot use this money for anything else. And that was basically a unfair treatment, accounting wise, that were really discouraging bank to to have any Bitcoin in their balance sheet, because it will remove the bankability to use cash for something else, basically.
And so now that that's been taken away, I think most people are of the view that this is going to open the doors to many more banks who actually want to provide some kind of Bitcoin service.
Yeah, indeed. Yeah, I think there will be 180 degrees. I mean, there is already, I think, 180 degrees in banking and Bitcoin.
So let's talk a little bit about Lana then. So I guess you've got this it's like a software that will enable this. So can you explain a little bit about that, and what are some of the ins and outs here of using this as a way to enable Bitcoin collateralized lending?
Yeah, so Lana is basically a lending platform as a service, really built for bank and financial institutions that want to offer Bitcoin-backed collateral. So if you think about Bitcoin-backed collateral, you need to have different features. You need to, of course, be able to custody Bitcoin. And so the way we have designed it, you can plug your custodians. You can have a different custodian if you wanted to. And it can be centralized custodians, like a BitGo or Fireblocks. But the idea is that you can also have a multi-sig for like your each one descriptor for each loan, basically. But you also need to manage your collateral risk. So if the price of Bitcoin is going down, then at some point you will have a margin call. And if the customer doesn't react and top up the collateral and the price continues to drop, then there is some liquidation that you need to think about. And so we're basically packaging a software that, handle all the technicality for the bank, so that the bank can go to market fairly quickly. I mean, from the end user perspective, I think it's a fairly known, type of loan, which is like, if I want to get a loan for my Bitcoin, I first deposit my Bitcoin, and then there is a ratio, let's say it's 50%. So if I have $1 million worth of Bitcoin, I can withdraw, maybe 500K, and then I need to repay. And the software is configurable so that it can be a credit facility, like a credit line, or it can be a loan, and you can configure, is the customer able to repay, in advance or not? Like, there's a lot of things that a bank might want to consider. Because the bank, and how to manage the risk on the interest rate, right? Like, but a bank might say, it costs like 10, 12% per year to get a loan from your Bitcoin. But then you need to source the dollar, right? And you need to source it at a lower interest rate. If the customer is able to repay, you need to think about, now I have like money that don't earn interest, and like I can, a bank can lose money on if they don't manage the risk properly and the interest rate properly. So we also provide some risk tooling for the bank to understand, how much money, depending of where the interest go, or the price of Bitcoin go, and like a lot of risk aspect to think about here.
I see. And so the idea then is this is like a software that they could use in addition with their other software that helps them manage the loan in terms of margin, liquidation, collateral, and these components of it. And then they would also need, I guess, like some kind of reporting out of it as well to sort of get, here's the current state of my loan book and that kind of thing.
Yeah. Yeah, so a bank typically have a software called a core ledger, which is their main software, which is like where they have all their customer information, their balance information, their transactions. And so it's like a software that will live nearby the core ledger, that will synchronize to the core ledger. It can be used as a standalone also. So it depends if it's... if there is a new bank that uses this as their main software, they can use it as their main core ledger. If it's an existing bank that want to add this Bitcoin-backed collateral offering, in addition to, all the other loan products that they will have, then it will be something that goes side by side with their core ledger, and there is a synchronization with their core ledger.
Yeah. And then the proof of reserves aspect, like how does that come into this? Like, are you seeing that as something that would be also exposed to the end user side, or I presume that's how it would work, right?
Yeah, so proof of reserve, if we stay back, I think proof of reserve is something that every bank in the Bitcoin should do. I think today there hasn't been enough Bitcoin bank that have worked this out. And I talk about it during my keynote at Plan B about, I think why I think that is. The reality is that I think today customers are not asking for proof of reserve, and which is why, for most Bitcoin bank, it's not, you have a list of priorities, and, if your customer are not asking for it, and you always have more, things that are higher priority. I want to highlight that I think Weaver in the US is doing great, to do that, but that's the only, I think, US Bitcoin bank that is doing it, and I think more should be doing it. What's interesting on proof of reserve is crypto exchanges, maybe 50% of them do it. And so I think maybe in the crypto ecosystem, there is more involvement in proof of reserve than for the purely Bitcoin only bank. And I think that, we should set the example, right? I think we need to, and when does a US bank, a US Bitcoin bank or brokerage will add this is if their user ask for it. So I think, user should be asking more about this. Now, to come back to the, when do you do proof of reserve? So you might have proof of reserve for the amount under custody, which is like, okay, if I'm using a brokerage service and I buy, $10,000 worth of Bitcoin, $20,000 worth of Bitcoin, my Bitcoin is here. I should have proof of reserve for this, meaning even though I've not withdrawn it to my cold wallet yet, I know it's here, I can verify. I think that's the first type of proof of reserve we might want to see. Now, when it comes to lending, it's a bit more trickier. It depends about, so if you do lending and it go to a individual multisig, like the Unchained model, then the proof of reserve is inherent because you see that
right, it's all on-chain.
UTXO is here and it has not moved, and so you don't need proof of reserve in that case. But no, if you send it to a custodian that is, it's not just for
like sort of
your
commingling,
loan, but,
right? Because it's not individual on-chain deposits or things like this.
Yeah. This is why it's become maybe more important to have proof of reserve, unless, I mean, some bank might want to do hypothecation, and in that case, that, okay, maybe you have a lower interest because your collateral is being reused, and there is interest being generated on that. But I think if proof of reserve is common, then that your Bitcoin is being reappropriated, and it's like higher risk, but maybe you pay lower interest, right? And you should be able to make your own decision about do I want to go there or not. But if you don't have proof of reserve, you have to really trust that maybe if it's a commingled wallet that they're not reappropriating, right? And I think it's this is why also the more there will be landing in the space, the more we need proof of reserve. Also, if we don't want to go back to a BlockFi or Celsius that we have 2 or 3 years ago.
Yeah, I guess it takes it away from the trust me bro model and having more, some proof of reserves, and of course as many people self-custodying as possible. That sort of helps the system stay a bit more less susceptible to this kind of fractional reserve practices that has happened before, like things like Mt. Gox and FTX and so on. And so in terms of the custodian, how does that work? Like if the bank is either doing, now some banks they'll have their own technical team who might do custody, others might use a professional custodian, others may use different approaches. How does that play with Lana?
So the idea of the custodian is like you can configure it. You can configure the custodian you want to work with as a bank. If you're a bank, you say, okay, maybe I just want to have multi-sig, or maybe my bank have approved 2 or 3 custodians that are known in the industry, and then. What we're working on currently is that every time you create a new loan or a new credit facility, you can attach it to a custodian. And so it's quite versatile, right? Where like, because maybe you work with a large institution that also want to work with this custodian. And so you agree on the custodian, or it's a bank, and basically the bank as a lender and the borrower. You say, okay, we're going to use this particular custodian. But maybe another borrower might want to use another custodian, right? And so there is, the way we think about it is that both the borrower and the lender should be able to agree on a particular custodian. Or if it's a multi-sig, great. Then it's about, okay, who have access to the multi-sig. And with Miniscript, it's fairly straightforward to set up a account.
And then in terms of Lana, like how far along is this? Like how mature is this product? And are you out there actively, promoting it now, or are you kind of in pilot phase? Like where is it at?
Yeah, so we started working on it about 9 months ago. We have no banks that are doing proof of concept with it. And we just announced it yesterday that we have this product, and now we want to work with more customer. But the way we think about it is that the reason we are also announcing it is because of what's happening really in the US with the regulatory environment. Up to now, we're really, I would say, building the product, and we were thinking, okay, there will be a need here, and the need is coming. But right now, it's really like a challenge from a technical, not a technical, from a regulatory standpoint to like bring this product to market. But now we think like it's the right time.
Yeah.
And so now we're like, we want to get more customer.
The lead sponsor of this show is Bold, the best place to buy, sell, and save Bitcoin. For listeners in the US, Bold lets you secure your financial future with complete peace of mind by integrating a low-fee, Bitcoin-only brokerage with next-gen multi-sig vaults. With Bold, you can smash buy Bitcoin or set a DCA plan for only 0.99% fees and seamlessly deposit the Bitcoin direct to your Bold vault. The Bold vault is a 2 of 3 collaborative multi-sig where you hold 2 keys and Bold holds 1 as a redundant backup, protecting against loss or theft. You can use Trezor, Ledger, or Cold Card hardware wallets to spin up a Bold vault in just a few minutes, and the Bold vault is the only collaborative custody vault available with 0 monthly fees. They're also offering 0 fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Try Bold today and upgrade your stacking experience over at getbold.io. And now, back to the show. And how, I'm curious, because I guess people who are maybe in a bank, in a fiat bank now, they might be thinking, well, is there an existing product that my bank has or an existing software that can already do this? Or maybe they have some kind of overall ERP, SAP thing or something like that. How would Lana compare with that?
So typically, if you have a core banking platform, this making loan is a key element that this software will do. But now you will need to think about, okay, how complex is it to make it, Bitcoin friendly?
Right.
And if it is, then, you might say, okay, maybe I will develop this type of product internally. But when you start thinking about, okay, maybe I need, different custodian, or I need like a multi-sig, and my system need to be real time because, I need to have it every time. If the price of Bitcoin is crashing,
you need to be watching the chain to see
it.
Deposits and withdrawals and
And like, do you have a real-time core? Do you have a core that is, posting entries like 1 time a day, which is the case for many banks? So if you have a very recent core, maybe you can do this, and it will still take you quite some time to integrate, I guess, all the aspect of Bitcoin into it. But yeah, if you the idea, at least our value proposition, is that you will go to market much quicker if you work with us.
I see, yeah. And so I guess part of it is just like working with people who've already been in the Bitcoin space for a while compared to sort of doing your own thing or working on using software that's not, let's say, specialized for Bitcoin. So in terms of, I guess, other products, as I understand, the idea is, Galoy is not just doing Lana, but there's kind of other Bitcoin banking software or infrastructure. Can you explain a bit about that?
Yeah, I mean, we've been building like for the last 5 years on different products. Another product that is relevant for, I guess, banks is called Kala. It's the idea of having a general ledger or like a double entry bookkeeping system. So one way to think about it is like maybe for most people in the Bitcoin space that are not working for a bank or don't have like banking expertise, when you have your own key, like you don't need to think about assets, liability, equity, this type of thing, because basically the assets is your key and the liability is to you. Like you don't have this like layer of abstraction that you need if you're a bank. So if you're a bank, and you're a Bitcoin bank, basically your assets are the keys, the private keys that allow you to spend the Bitcoin. So for assets, you have Bitcoin, and you have what we said liability. Liability means that as a bank, I owe money to people, right, to my customer.
Right, if they have accounts with
make
you,
sure
etc. Yeah.
It match, right? And so and this is why proof of reserve matters, is you want to make sure that you have more assets than you have liabilities, so that you can, every customer can withdraw the money at any point in time. But when you start thinking about, okay, assets, liability, and you have also equity, which is the value that the bank have, or like the money that they have if the bank were to be wind down. No, you need software to manage how you move the money from one account to another. And this is where this software called Kala is something that we use for Lana, for instance, like to manage all the account and the interest and all that. So it's another quite powerful software that we have developed over the years. It's like right now it's a V3 because with Blink we did a V1 and then we iterate on how to make it better, and we have an idea of a template system which is quite important. So it's Kala is another product that I guess some banks might want to look at if they integrate with Bitcoin. Another that we have is called Boya, which is our custody solution and payment solution for Bitcoin on-chain, which we have used for Blink for the last 3 years. The idea is that how do you scale on-chain payments, like for wallets that have a lot of customer, and you need
like
to think about batching
and things like that.
Type of thing. Yeah.
Gotcha. I see. So this is like software so that a bank can manage its on-chain withdrawals for the customers and this kind of thing.
Yeah.
Gotcha.
Yeah.
Okay, interesting. Okay. So interesting to see the meshing or the merging of the Bitcoin and the fiat worlds. And we'll see what happens there in terms of fiat banks. Do they come to the party? I think they will over time. Maybe it'll take some time, but I think there's a clear incentive, right? Because there's so many people who want Bitcoin that clearly there's some money to be made here on the fiat banking side, so they're going to come to it. Any thoughts on what does that look like? Is that going to be like they're all rushing to, your phone is ringing off the hook, or is it more going to be like a steady? I think it's going to be more like a process over the next few years that they start to open these conversations.
I think bank will want to rush into Bitcoin as soon as they can, and I think now they can. And so, I mean, is it going to happen in weeks? No, I think it will take, months or probably more years, because it takes time still to for bank to understand that there is regulatory clarity here. We're not going to risk our business by adding this new product, this type of thing. But If you think about it, I think the last 3-4 years was extremely hostile to Bitcoin in general. And now it seems to not be the case anymore, and things can change quickly. So I'm very bullish on having, generally banks adopting Bitcoin. It remains to be seen is like, who is going to get the biggest pie? Is that like banks, larger banks, smaller banks, but today fiat banks that will go into Bitcoin? Or is it the Bitcoin businesses that
rise up and become fiat banks as well?
So
it'll be interesting to see which way it goes. We'll just see many different approaches there. On the El Salvador side, I'm curious if you have any just on the ground insights to share there, especially things like around the legal tender law and just kind of Bitcoin adoption on the ground. Has that really changed, or do you think like the legal tender law was sort of not that relevant in terms of getting adoption on the ground?
Yeah, I mean, something worth mentioning, I guess, maybe some of your listeners know, but maybe some don't. So, El Salvador has adopting Bitcoin as legal tender in 2021, but the law was repealed 10 days ago. Yeah. And so Bitcoin is no longer legal tender in El Salvador as of 10 days ago, I think. And what's interesting is that 2 countries in the world have adopting Bitcoin as legal tender.
Right.
El Salvador
Central
and
African Republic and El Salvador. Now,
and both of them have going back and now we're down to 0, countries in the world having Bitcoin as legal tender.
Sometimes it's 2 steps forward, 1 step back.
Yeah.
But I guess anyway, to the question of to the question of like, does it matter on the ground? What's your insight there?
So, okay, there's a lot of influx of Salvadorian using Bitcoin 3 years ago. And there was a government wallet called Chivo that was rolled out, and it didn't work out very well. So the adoption of Bitcoin over the last 2 years was, I would say, quite steady, not necessarily growing. The legal tender law said it was mandatory for business to accept Bitcoin, but this was never enforced. And so the fact that the law was repealed, I think, doesn't really matter because the law, was never enforced anyway. It's important maybe also to say that the law was repealed because the IMF, there was some discussion for many months, if not years, that El Salvador could get a loan from the IMF if apparently they repeal this law, right? So it's not that El Salvador wanted to repeal the law, but there was some external forces that were here to pressure El Salvador to going back on this law. And if you think about it, if you remove a law that says that you have to accept Bitcoin, but it was never enforced, maybe that's not a big deal. Some people have different point of view on that. One thing I'm curious about is that a lot of the large businesses here in El Salvador have accepted and still accept to this day Bitcoin payment. Like you can think of the Walmart of the world, the Costco, McDonald's, Starbucks, like all this international chain. They abide by the law. It's unclear to me whether now that this law is being repealed, does all this large corporate business will stop accepting Bitcoin. And probably because they were accepting Bitcoin to make sure the government could not, fine them, because it was mandatory as part of the law. And I think it would be not great for Bitcoiner living here if suddenly, you couldn't spend those Bitcoin in all those places. We will see if they stop accepting Bitcoin or if they continue to accept it. But for me, that's one of the things I'm looking at. Because I go in those places, and this is where I spend my Bitcoin, right? Basically. And if this law was not here, probably those businesses will never have accept Bitcoin in the first place, right? All these international businesses. So yeah, I'm curious on how this play out. I think it's worth mentioning that Bitcoin is very beneficial to El Salvador. Like El Salvador have probably the largest growth in tourism compared to any other country. And, part of it is because of the increased security, but part of it, I think, is because now El Salvador is like becoming a financial hub. It's just not like a place where you hear about it because of, murder rate or something. And so I think the fact that El Salvador has adopting Bitcoin have really benefited El Salvador.
Yeah, and I guess it's important to note that it's different in the sense that El Salvador is still stacking Bitcoin, right? Whereas like the Central African Republic, like there was like a shit coin. They had some Sango coin or whatever, something else. I don't know. Whereas like with El Salvador, they actually still hold Bitcoin. They're still stacking Bitcoin, and there's still like an actual grassroots movement on the ground to get Bitcoin adoption and this kind of thing. So it's a very different thing to compare. And yeah, as you said, the tourism aspect.
The only thing, I think it's an attack on maybe Bitcoin as medium of exchange, right? It's great that El Salvador stack Bitcoin, buy Bitcoin. But if you think about it, like it's the state buying Bitcoin. And now you're saying, okay, like on the ground, maybe the signal that the IMF tried to send that, no, the citizens should not use Bitcoin, kind of, right? Like it's too risky. And so, of course, it's great to see states, great, I don't know. I mean, it's open to debate, I think. But, we're left with El Salvador will continue buying Bitcoin probably for the foreseeable future, some strategic Bitcoin reserve. But I think, for Bitcoin to succeed, like we want to see it continue as a medium of exchange. And right now I see this low repeal as still like a step back on Bitcoin as a medium of exchange, I think, which is where, it's like, not too great in my mind.
Yeah, I see. Yeah, I think, we'll just have to see what happens there. It does seem though that, like as an example, even the Plan B forum in El Salvador, there was a big attendance. I think it was like 2,500 people. So, and actually I think 1,000 or maybe 1,200 of them were Salvadoran as well. So it's not just like all these, American Bitcoin people flew in for the conference. It's actually, there are local people interested in Bitcoin too. So I think that's certainly notable and interesting. But we'll just have to see what happens over time. Like maybe as number goes up, there'll be kind of a new round of people pulled in, and there'll be all these people who already sort of have some familiarity with Bitcoin, or they see the stores that you can already buy things with Bitcoin and so on, or it's a way to earn money or remittances and these things. So we'll just have to see what happens there. Hey, but I'm curious, what's your kind of outlook on El Salvador, right? I mean, you're still staying in El Salvador, right?
Yeah, staying in Salvador, I think it's a great country to live. I like that people are very positive on the future, and that's not something that you see, I think, in most other places. Also, maybe this is changing, but Salvador is a great place to live. The weather is great year long, and there are a lot of Bitcoiners here, and that's the fact that there is no multiple Bitcoin conferences is kind of interesting, right? I would have never guessed that years ago. And there is some. Probably some new ruling coming on banks that will be using Bitcoin here more. So I see that it's not like El Salvador is like stopping any Bitcoin interaction. Right? It's really a play at force with the IMF. As I understand,
Tether announced that they're going to set up a headquarters there. They're still doing like the kind of asset platform, I think, something there. So we'll see what happens there. But yeah, I think that's about all we've got the time for. So where can people find you online? And I hope people check it out.
Yeah, my Twitter is Nicolas Burtey. I'm sure it will be in the show note. And for anyone that have an interest into like Bitcoin back lending, I mean, we have announced it yesterday. We have quite a bit of people reaching out, which is great to see. But you can go to galoy.io and feel free to reach out to us to discuss.
Fantastic. Well, thanks for joining me, Nicolas.
Thanks, Stephan.